We've heard from policymakers and business leaders. Now it's time to hear from another set of experts, academics who understand the nuances of private equity. Greg Brown is professor of finance at the UNC Kenan-Flagler Business School. He's also research director at the Institute of Private Capital. Francesca Cornelli is the dean of the Kellogg School of Management at Northwestern University. She is also professor of finance and the Donald P. Jacobs Chair of Finance. They're both highly regarded scholars in the fields of finance and business management. Welcome to you both, and I'd love to make this a conversation. Let's make it, like The View on private capital and where it is. But would love to kind of, give you a challenge here and just open up. Our economy in the United States has been hit by the largest crisis, the most significant crisis since the Great Depression. And so I'd love to hear, Francesca, how you put it back together.
Well, I think it's important not just to invest money, but invest money with a plan. And also, I think a lot of people are saying a lot of sectors coming out of this crisis, it means also to reinvent, to change the business, to innovate and take different angles. And that is why you need particularly smart money in the sense of capital that comes with new ideas, a new angle, an ability to actually invest. It's not just a recovery, it's actually ability to change strategies in many cases.
Greg, how would you respond as well? Because I know you've looked at these component pieces, and particularly private equity and what it does. Do we applaud that and say, hey, more? Are there other elements of the nuts and bolts of the economic system that you think need to be prioritized in this time of stress?
Well, I think the important thing to understand is that there's going to be a lot of different solutions that are needed for different companies. The small companies and particularly dislocated industries are going to need things that are different than large public companies. The private capital world is particularly well situated to help companies in times of need. There's a whole turnaround aspect to what a lot of private equity companies do. So I expect that there's going to be a lot of deal activity. There's going to be companies that move from being public to private, but there's going to be private companies that realize they need the expertise that private equity back investors bring. And I think there's also going to be pieces of public companies that come out and need to be restructured. And this is something that private capital has just got a good track record in doing.
Thus far, Greg, and I don't, and Francesca, I'll come to you on this too. We've sort of dealt with private capital as sort of a monolith. There are different kinds of companies, different sorts of investors. You just mentioned the expertise that comes packaged with some of this. What are the best examples of what you would call, AAA private capital behavior versus those that are not AAA? What characterizes the best form of private equity investment and those that we wouldn't be proud of? Greg?
So maybe I can start. Oh, you're asking Greg, sorry.
Yeah, go ahead, please, go ahead.
No.
Okay.
I have done some studies, for example, that look at the fact that we looked at the type of partners or people working from private equity, and we show that during recession is where the funds that actually perform better in the long run are the ones that increase the number of people in their team with more of operational background and actually have more of turnover in the operational background. So in other words, we do see that, as you're saying, the AAA cases are people who are able to renew themselves, put more focus on the value creation rather than the financial engineering, especially during recession, and also are able to bring in new people and therefore not rely only on how's it been done so far, but different way. And that is the right way. While the people, the funds that don't necessarily perform as well, they're not so successful, is when you are not as able to renew itself, because then you can't bring in the company, in the investment, this special expertise.
So you're saying the crisis matters. Greg, your thoughts on this? Does crisis get all of the players to respect each other more, work together more? Does the knowledge and what's needed for an economy, sort of blossom better in time of crisis like this?
Well, it probably causes people to consider things that they wouldn't have considered otherwise in terms of what are going to be new business models, what are going to be new markets. We certainly know there's entire industries that are going to be facing a very different landscape for their goods and services. And so to the extent that you can bring expertise to the table to solve these problems more effectively through the governance structure and the operating structure that private capital has, I think that that's a very valuable aspect of private equity.
Now, you've just done a study on the effects of private equity on corporate productivity and the returns for investors, Greg, and I was looking at just this week that there was a study that showed that particularly for state investment funds, pension funds, et cetera, that those private equity funds did substantially better for nuns. What's going on there?
Yeah, so we've just looked at what historical returns have been in private equity, and what we found is that there's been pretty consistent excess return from buyout funds over what we think is an appropriate public equity benchmark. And this is something that's been in the press quite a bit the last few years because people sort of feel like maybe returns have been lower in the post-crisis period. But what we really found was that there was sort of a lull around the great financial crisis, and then returns have picked back up again. So it looks like the excess returns that investors get from private equity are actually more durable than a lot of the discussion would lead you to believe.
Francesca, you have studied the globe, the world, lots of different systems. And I think one of the questions that always comes up, and it does for me too, are there examples out there that we should emulate, or are there examples out of there we should run away from? And when we look at the way capital flows, and right now we have huge infrastructure needs. We have large companies, as I was just discussing with the executive chairman of BJ's wholesale warehouse, that there's going to be a large capital need in this country. Is there somewhere else that does it better, or is the U.S. system as it is now largely okay, or how would you tweak it based on a comparative basis?
No, I would say the U.S. is one has been doing the best in terms of private equity because that some of the best return has always been seen as the quality, so that in periods of trouble, the capital has moved back to the private equity in the U.S. versus others. I would say, however, one of the things is even U.S. private equity fund, when invested in developing market, one of the biggest difference is that there's no access to debt. And therefore the leverage cannot be one of the major components. And yet they still manage to deliver excess returns. So in a way, the message is, the experience from there, even from the same US private equity fund with some funds specialized on developing, is that even in absence of recourse to debt, they could achieve excess returns.
Let me ask you, we're getting pretty close to the end of our program here, but I'm asking you a big kind of slightly metaphysical question. I hope you'll forgive me, but it's one of these things that when you look at what changes, what disrupts an economy, what disrupts workers and jobs, some people blame trade, other people blame technology. And recently I've done programs on smart cities, the Internet of Things, AI, automation, which is all coming online. Private equity drives some of this, but lots of investment drives this. Change drives this. And I guess my question to you is, as we try and advance as a inclusive, holistic economy that moves forward rather than falls backward, I just want to put you both in charge. We know the capital story, but how do you kind of square the corners so that the economy moves in a place where it trusts capital rather than fears it, that it can embrace change and the reinvestment that it requires rather than fears that? Is that a silly notion? Greg?
No, I don't think it's a silly notion. I think this is where policy is so important. So, really the foundation of our economic system is we want to set a playing field, and hopefully it's as fair a playing field as possible. Let businesses compete. There's going to be winners and losers, and then the role of policy is to make sure that everyone comes along. And I think this has been a big challenge for policy because the world has become so dynamic, and it's because of trade, it's because of technology, all the things that you mentioned. But this is why policy is so crucial.
Before I jump to Francesca, do you think there are elements of public policy that need to shift so that this equation is healthier and smarter?
Well, I do. I don't want to get off on a tangent with regards to
you get 30
tax
seconds. You get
policy or
30
other
seconds
things,
for a tangent. You get 30 seconds for a tangent.
but I mean, I do think we have to seriously examine the fact that there's been a growing income gap and wealth gap in the U.S. and think about what are policies that are going to allow more people to participate in the economy. I am a strong believer in education, as you might imagine. I'm an educator, so I think things that we can do to increase access are going to increase opportunity for people, and then people are going to feel better about their own role in society, being a more fruitful contributor.
Thank you. Francesca, let me give you the last word. How would you kind of put these pieces together? And again, private equity is a key piece of that equation. But how do you think we can kind of get to more trust in the system and kind of leaning forward? Because I know there's a lot of fear out there. Believe me, I hear it every day about the fear of disruption and the impacts that this is making. So I want to kind of check that box off and say there are problems out there that need to be fixed. What are the steps you think we can take to make that ecosystem of the economy healthier and smarter?
So I think one of the things people really have to let a bit go is the idea that they have to monitor every result and step. And I think that is part of the fear, but to a certain extent, that would be one of the advantage of the private equity, that you don't have to keep quarter results. Therefore, you can invest for the long run and look at the final results. I think too much people look at one case gone badly, or even 10 cases gone badly, and therefore try to repair by looking at what is happening in the middle. I think people need to start accepting that disruption happens, and disruption during the lifetime of an investment matters, and started looking at long-term returns and large numbers. But the sense that you can control by looking at short-term numbers is exactly what's bringing to the short-termism that then we criticize in the stock market. So that is not the solution.
Well, I want to thank you both. I mean, I would love to spend an hour with you and go on a much deeper dive than we have today. Greg Brown from the University of North Carolina Kenan-Flagler Business School and Research Director of the Institute for Private Capital, and Francesca Cornelli of the Kellogg School of Management. Thank you both so much for joining us. Hope you'll come back because we're going to be monitoring this question of how I kind of want to do a series of programs. But what does a healthy economy look like? How do you get all this moving right? What do we need? This is a time a lot of companies are flat on their back. So I appreciate your time and thoughtful insights into your research. Thank you so much.
Thank you.
That brings us to the end of our program. A big thank you to the American Investment Council for their support and to all of you attendees for joining us for this very important discussion. If you missed any part of the conversations today, head over to our website at thehill.com/events, and we will have the entire video from the program up there shortly. I'm Steve Clemons. Be well.